I-bonds were the hot investment in 21, 22, and for a bit of 2023. But are I-bonds a smart investment now in 2024? If you want to make the best choice on I-bonds, really, I think you want to compare them to the alternatives. When you're looking at I-bonds, which I-bonds, when you buy them today, you cannot take the money out for at least another 12 months. You really ought to compare them to types of investments that are similar, where maybe they come due about 12 months from now. So let's look at all the different alternatives. We've got the I-bonds that we're talking about. Really, the best comparison is a 12-month treasury bill. And then you've got CDs. And I'm going to put into there high-yield savings accounts and money markets as well. Now, the high-yield savings accounts, those don't come due in 12 months because you can take the money out whenever you want. But oftentimes people look at that as an alternative for the I-bonds. Now, with the I-bonds, right now, before they switch over in their interest rates coming up in November, you can get 4.28% on the I-bond. From that, inside of there is a 1.3% fixed rate. That 1.3% fixed rate, that'll stay with the life of the I-bond. So you are guaranteed by the government to get 1.3% above inflation for up to 30 years that you might hold that I-bond. A few things to keep in mind too with I-bond is, again, for 12 months, you cannot at all, even if you try, take money out of the I-bond. And for the first 5 years, there is a 3-month penalty in that you lose the prior 3 months of interest whenever you cash it out in the first 5 years. When you're getting interest rates of 6, 7, 8, 9% on the I-bonds, you aren't focused so much on things like this. You're focused on that high interest rate. But here we are with I-bonds at 4.28%. And when you see the I-bonds renew or come up with new rates in November, that rate appears to be headed closer to 3% for new I-bonds starting in November. That'll be officially announced November 1. Let's compare that to the 12-month Treasury. 12-month Treasuries, those prices, those interest rates, they change every day, every part of the day. But right now in mid-September, you're looking at roughly 4.5%. But you want to compare and look at that every single day. It could be much higher, much lower the day that you're making this decision. 12-month Treasuries from July 2nd to August 2nd in 2024 dropped by 0.5% in their interest rates. So you can see how those interest rates can change quite drastically. With CDs, not tied exactly to the Treasury market, not tied to how I-bonds are set up, but banks are putting together the interest rates, and they're basing those interest rates on kind of what's going on in the market. In the world of CDs, you might see a 5% or so one-year CD, but those rates seem to be heading on down. Same thing with the high-yield savings accounts, where you might be seeing 5% or so in the high-yield savings. So as you're going through looking at all your investments and opportunities, it does appear that these rates are highest. But when you take a look at it, the CD, the danger is you lock in for your amount of time, interest rates may go up. Perhaps interest rates don't go down. But if they do go down, when the CD renews, how do you get a good interest rate then? It might renew at a lower rate. The high yield savings account, great for flexibility, but the rate could adjust virtually every single day, where you might be 5% today, could go down over the long run. The I-bonds have the lowest rates of what we're seeing right here overall, especially if you're looking in November, maybe a 3% rate or so in November through 2024 through April of 2025. We'll see how that turns out. When it comes to buying I-bonds, if you think it's a smart investment and you want to buy the I-bonds, that fixed rate, which is a 17-year high, that ability to beat inflation by 1.3% for as long as you want to, up to the 30-year maximum, that's a big feature on there where you may consider this more of a longer-term investment because you want to get that I-bond and beat inflation by the 1.3%. The 12-month Treasuries, you might want to buy into those because you want to lock in that rate and maybe make a bet that if interest rates go down, oddly enough, if interest rates go down, the value of your bonds go up. That's something you might be looking at. With CDs, that's where you can lock in and get the rate that you're looking to get for that same amount of time. And of course, the high yield savings accounts, that's where you get that extra flexibility because you can take the money out anytime that you want. The best advice I have for you on whether I bonds are a smart investment or any of the other alternatives might be a better place to go is to consider, when do you need the money and what is the goal? If you need the money incredibly soon, that high yield savings account might be the way to go. If you need the money 1 year from now, well, look at something like a 12-month or a CD and say, what's the best interest rate today, whenever it is you're looking at that. And if you're someone that is a long-term saver, someone that likes to have some extra money set aside and is concerned about inflation, the I bonds are the only option of these ones that guarantee you will be above inflation as time goes on. So take a look at those alternatives and decide for yourself, are I bonds a smart investment for you in 2024? Hi, I'm Jeremy Keil, owner of Keil Financial Partners. And if you're interested in seeing how we help our clients get more income, pay less in taxes, and avoid big retirement mistakes, make sure to go to keilfp.com. That's KEILFP.com.